Welcome back to Chairman's Briefing in partnership this week with Mawson Finland. I'm Rachel Lee, and you know the drill. Let's get into it. Gold surpassed the 2,700 zone last week, peaking close to year-end targets earlier than expected. As gold continues to thrive on uncertainty, its charge to all-time high ground is now a staple in the economic news cycle, underpinned by factors like consistent central bank buying and monetary easing by the U.S. Fed. 14 days out, there are 89% odds of a 25 basis point cut. The lack of clarity over the medium-term direction of U.S. foreign policy is adding to nervousness, according to Rana O'Connell, the head of market analysis for Europe, Middle East, Africa, and Asia at StoneX. On investor allocation, Joni Teves, who is precious metal strategist at UBS, told CNBC that investors still have plenty of room to build gold positions. Quote, generally, we think the market is still underinvested in gold, and therefore there's room for more allocations to be built up. UBS has a target of $2,800 to close out 2024. In what many characterize as an aggressive move, the Bank of Canada cut interest rates by 50 basis points this Wednesday, and gold prices in the broader currency market showed little reaction to the loonie. Looking ahead, the Bank of Canada expects interest rates to continue declining. Stephen Brown, who is deputy chief at Capital Economics, said he does not expect the Bank of Canada's aggressive easing to be a one-time event. He added that as the economy continues to weaken, the central bank will likely be forced to maintain the steep rate-cutting path. Sometimes the best of the best will disappoint. Newmont missed Wall Street expectations for third quarter profit on Wednesday, posting adjusted earnings of 81 cents per share and missing the expected 86 cents, according to data compiled by the London Stock Exchange. Although total gold production increased 29% to 1.67 million ounces, rising maintenance costs at the Lahire project in Papua New Guinea, higher expenditure for contract services across portfolio projects, and lower output in Nevada overshadowed total production achievement. Despite these headwinds, Newmont projects their strongest quarter ahead, targeting 1.8 million ounces in Q4. Silver crossed over the $33.6 per ounce mark and is exposing a significant market risk. 5 major U.S. banks are facing potential billion-dollar losses due to their large bets against silver's price rising. The scale is staggering. These banks have bet against nearly a year's worth of global silver production. Critics argue that this level of short selling creates artificial downward pressure on silver prices, potentially suppressing its true value despite strong industrial demand from sectors such as solar panels, military applications, and electric vehicles. This paradox stems from the disconnect between paper contracts and the physical metal. Banks can sell paper silver contracts without owning actual silver, artificially pushing prices down despite strong physical demand. This practice risks triggering a supply squeeze where rising prices could force banks to buy large quantities of silver to cover their positions, potentially leading to billions in losses and disrupting industries that rely on the metal. Driven by 12-year highs in the underlying metal, silver stocks across the board have gone on a tear in recent sessions. One example is Blackrock Silver, which dropped a round of high-grade assays from its flagship Tonopah West project in the Walker Lane trend of southwest Nevada. This discovery extends along a significant length and remains open for expansion in multiple directions. These findings are particularly significant as they could enhance the project's economic outlook, which was detailed in a recent economic assessment. As the company continues their drill program, these recent assays triggered a rally in the company's stock, powered as well by the strength in underlying metals. Mawson Finland announced new results from the final 13 drill holes of the 38-hole 2024 winter drilling campaign on its wholly owned gold cobalt project in Finland. Detailed results can be read on CEO.CA. Just search MFL. In a recent briefing, we reported that Rio 2 has obtained all necessary sectoral permits, allowing them to move forward with constructing their Phoenix Gold project in the Atacama region of Chile. And it didn't take long for management to arrange a construction financing package funded mostly by Wheaton Precious Metals with $120 million. The remaining raise that's required started off as a $40 million public offering that jumped to $55 million, with shares priced at 65 cents each. The company managed to upsize this original target, suggesting strong investor appetite, and they kept it clean with no dilutive bells and whistles. In total, they're putting over 84 million new shares into the market. Heading into Q3 earnings, due to drop after the market close on November 6th, Wesdome Gold Mines announced that it's on track for a banner year. The company reported gold production of just over 45,000 ounces in Q3, compared to about 27,700 ounces in the same quarter last year. Let's take a deeper dive at their exploration targets at the Eagle River and Kiena mines. Now, Eagle Mine is benefiting from improved access to high-grade ore and consequently higher than planned mill throughput. Ramp development at depth along the 300 zone continues to track ahead of plan, ensuring consistent access to high-grade ore through the remainder of the year and into 2025. At Kiena, the focus remains on improving execution consistency and achieving key milestones, including the development of the Presqu'île exploration ramp and advancing the Kiena Deep ramp to level 136, which will unlock a new mining horizon and enable the company to explore extensions of the ore body. Wesdome's 2024 production guidance range is 160 to 180,000 ounces. Taseko Mines is pulling its Florence copper project in Arizona forward, where construction is nearly 40% complete and on track to begin producing by the fourth quarter of 2025. Now, despite initial opposition and legal challenges over environmental concerns, the project advanced after receiving approval from the U.S. Environmental Protection Agency late last year. When fully operational, Florence will be the company's second producing asset, with a production capacity of 85 million pounds of copper per year over its 22-year life, and will trigger a 120% increase in production. Ascot Resources plans to raise roughly 40 million Canadian dollars to restart operations at its premier mine in the Golden Triangle of Northwest British Columbia after shutting the project down not too long ago. Our regular listeners might remember from a previous briefing that Ascot put the project on care and maintenance in September after missing production targets due to inadequate ore feed at its mill. The company had sufficient funds at the time to facilitate the shutdown, but not enough to complete the additional development work. Next up, Excelsior Mining is permitted to restart operations at the Johnson Camp copper mine in southeast Arizona. Anticipated to produce copper in the first half of 2025, Excelsior is reviving this historic open-pit copper operation with Rio Tinto's help, specifically through their technology venture called Newmont. Newmont will develop its proprietary heap leach technology at the Johnson Camp site, and in return, Excelsior will be paid $5 million for the use of mine infrastructure. Expected to take 5 years, this development program between the two could lead to a joint venture, with Newmont holding 49% and Excelsior maintaining 51% ownership. First Quantum announced earlier this year that it was in talks with potential investors to sell a partial stake in its Zambian mines, while also exploring the sale of its Spanish mine called Las Cruces to raise capital and cut debt after the Panama government ordered the shutdown of its flagship mine. Well, 3 people familiar with the details told Reuters that Saudi Arabia's Manara Minerals is closing in on a deal. While there is no guarantee of the deal, sources say that Manara is in advanced talks to acquire between 15 to 20% equity in First Quantum's Zambian assets. The stake could be worth up to $2 billion. And that's a wrap for this briefing. Support the CEO.CA channel by becoming a subscriber and go the extra mile by turning your bell notifications on. Thanks for being a part of Chairman's. We'll see you next week.